All right, let's have it. Phil?
Hey, good morning, everyone. My name is Phil Marquardt. I'm coming to you from Model Mortgage Selections along with Mark Castle. We're going to be doing an overview of some of the products out there for mortgages and outlining some of the pitfalls and issues with going through some of those. So I'll get started with the first one that is well known, which is conventional. And that allows to go up to 97% financing for first-time home buyers. A first-time home buyer is labeled as somebody who hasn't owned real estate property in 3 years. Other than that, the next lineup would be 5% down or 95% financing under the conventional product. Most of you know the conventional product, when you're putting 20% down, you don't have MI or mortgage insurance. So once the 20% is reached on a down payment, then the mortgage insurance goes away. Traditionally, you need a 660 credit score to get into this product. And this also allows 3% from the seller towards the closing cost for the buyer. The conventional product does. The next item that we're going to go over is the government products, which falls under FHA, VA, and USDA. Under FHA, the down payment minimum is 3.5%. This product allows for the seller to give the buyer up to 6% of the purchase price towards their closing costs. And this traditionally requires a 660 credit score. We do, however, have options to go down to a 500. There are some restrictions that apply. I can go into those more in detail with you and also with the client. The next product is the VA, and this is for veterans or their spouses, surviving spouses. This allows to go up to 100% financing. There's no mortgage insurance on the VA loan, and the seller is allowed to contribute up to 4% towards the closing costs for the buyers. We also have options to go down to a 500 credit score for the VA loan. There are some restrictions that apply for this one as well. The next one is USDA, or known as the Rural Development Loan. Not every property will fall into this category. There is a property tool search that we look up and use the address to find out if the house qualifies in the area for USDA. This allows the borrower to borrow up to 100% financing on the home. It traditionally requires a 660 credit score, but we do have some options to go down to a 500 on this one as well. Some restrictions apply. The last one I'm going to go over is the jumbo product. The jumbo is defined as a loan that is financing over the new 2021 conforming loan amount. So the 2021 conforming loan amount is $548,250 or $548,250. So once you finance $1 over $548,250, you're in a jumbo loan. So you will have some clients that are buying something maybe $700,000 or $800,000, and they may strategize to finance the maximum amount before they're in jumbos, and that's $548,250 as of 2021. There's some options to do up to 90% financing on a jumbo loan with no mortgage insurance. This requires a borrower to have around a 700 credit score. They can use this product for a first home and a second home. One of the last items I'm going to go over before I turn it over to Mark is there's been some changes with the 1003. The 1003 is also known as the mortgage application or the URLA. As of March 1st, we're going to be going forward with a brand new 1003. It has some additional items that have been placed on there. The pages are a little bit longer now and have some more details to them. So we're just bringing everybody up to speed that as of March 1st, you will notice that borrowers will be answering a few more questions on their application than in times past, but we've already started working on these applications as of February 1st, so we're ready to go for March 1st. So just want to bring that to your attention that there's been a few changes with the application so everybody's aware of it. And with that, I'm going to turn it over to Mark Castle, and he's going to go over some other non-traditional products and an outline of the process from application to closing. Go ahead, Mark.
Good morning. Thank you, Phil. Mark Castle with Model Mortgage Selections. I'd like to talk to you about a few different products that we're offering right now. Just a few in our heavy arsenal of products that are out there. Some of the ones we're talking about this morning is the DSCR product with a debt service coverage ratio. And this allows for a maximum LTV of 80% and up to $3 million on a non-owner occupied investment property. No reserves, no income, no job verification. Basically, the rent is done by an appraisal of 1007. They'll come in there and do a survey, and if it appraises for $1 more than what you're going to rent it or have it as an investment rental property, then it's going to pass. The other products I'm going to talk about is foreign nationals. We do have some foreign national products out there at the 1 to 4 units, non-owner occupied, up to 3 million, 70% max LTV purchase, and a 65% max LTV refinance. No income or credit required, and condos allowed. This is coming in under our DACA and our Dreamers now for our non-permanent resident aliens permitted to reside and work in the U.S. and then permanent resident aliens they're already living in the U.S. They have a right to live and work. Those programs available with employment authorization documents on hand are accepted into the DACA and Dreamer program now. So we have a couple of those programs that just kind of hit the market, and they're kind of unique. They're a niche, and like Phil said, we're taking FICO scores. We're working with FICOs into the low 500s for our VA, for our veterans that are restructuring their credit. We're working with FICOs with a couple different lenders that are down in the VAs for regular conventional loans as well, that look like they have a clean year's worth of basically repayment history. So they're getting a little lenient on that, and that's good. So we're able to get some folks in the home that basically for a year have been paying their bills and have a good credit history. So with that, any questions on those products or so far?
I have a question in the chat box. So if anyone else after my question here, you can just raise your hand. We have a question. Can you do USDA on a brand new manufactured home?
We need to do some research on the property address to make sure it falls into that area. And do we know if it's a double wide?
Manufactured homes that are already existing on a parcel is my understanding.
Okay. One of the issues we fall into is I have a lot of individuals coming to me with single wide properties, older ones. So I just want to find out if it's a double wide. And
It is a double wide.
Okay. So if you send me the address, we'll go in and we'll take a look at it and we can follow up with you on that question.
Ann has a question.
Just back on the foreign national one, 1 to 4 units up to 3 million, but you said something about 65%. They can get a loan up to 65%, or was that
on the foreign national, the max LTV on a refinance is 65%.
Okay, thank you.
And we're at 70% on LTV for purchase.
Anyone else?
Those were on the same product?
Yeah, on the foreign nationals, you have a 1 to 4 owner, non-owner occupied, $3 million, 70% max LTV on the purchase, and you could do a 75 max LTV on a refinance.
Okay, thank you.
You bet. All right, any other questions? So now we'll get into understanding the process and the loan process from a very high level view of what Phil and I are doing on a day-to-day basis and how that run alongs with you guys as agents and title. So how do mortgages start from beginning to fund? What exactly the loan application process is, and we'll start with the pre-qualify. So a pre-qualify starts over the phone. It can be online, it can be in person, and reviews your credit report to make sure that the information is accurate and as helpful as possible. The pre-qualify process is when we request all the documents from the borrower in order to start the loan application. Generally done all before your loan application. So your loan application starts, and that's the official form Phil was talking about, the 1003, which has now been revised, also called the IRLA. This is a submittal of all your documents into our system or different software systems, and it matches, we can use it to match the right product for the borrower. The loan estimate is generated and the initial disclosures are sent out to the borrower for their review and their signature. During this time, the borrower finds a home, goes under contract, home inspections, all generally occur at this point. At that time, the loan will be under processing, continue to process, and head to underwriting. And then underwriting begins to review the documents. Underwriting reviews the application, starts with verification of employment, verification of mortgages, verification of bank statements, title insurance, all the documents they need. They may ask the borrower, or we may ask the borrower, to go ahead and get a home insurance quote at that time. Then approval. So approval is when underwriting is providing a list, being that they're approved, that may be required to close, for example, some additional documents like pay stubs, or if a month has lapsed, they might want a more recent mortgage statement on there. And after the approval, during this time, usually the appraisal is ordered, given a reasonable market value of the home to protect the borrower from paying too much. So again, very high level view here. So appraisals ordered, and then we go into pre-closing, which the settlement costs and the closing documents are drafted, and they're all forwarded to the title company. Then we go into our closing disclosures. This is the final settlement. It's sent out and reviewed and approved by all parties. At this time, usually the borrower will take his final walkthrough, tour the property, approve the condition of the home prior to signing all of the closing documents. Then we'll go to title. Title company compiles all of the final documents to be signed by all parties. At closing, all parties have signed, all the funds have transferred, and the final paperwork is uploaded. So that's a very, very high level view of the entire loan application process, all the way from start to close or fund. Any questions on that end?
Nanette?
Go ahead, Nanette, your mic is off.
Okay. When we have on our contract, the loan commitment date, what do you provide to us at that stage so that we can meet that loan commitment date for our buyers?
Well,
Okay, so
go ahead, Phil.
go ahead, Mark.
I was just going to
All right.
say on a loan commitment, so when they're approved, they get approved with the conditions. Loan commitment, basically, in your side of the things, doesn't mean exactly what it means on our side of things. So loan commitment is basically the clear to close. The lender has committed to close with the borrower, and we have a date set, and we're clear to close. That could range from a couple of days. It could be a couple of weeks. In some cases where they decided to close a month or two from now and go ahead and get their paper out of their funding out of the way, it might be in that scenario. But usually it's just a few days out before they get their CTC or clear to close.
Oh,
And let me go ahead and touch base on it. So at the beginning, after we give you the pre-qual letter for them to go shopping, once we've submitted everything in and it goes into underwriting, it comes back with what's called the conditional approval, meaning there's a couple items that they want to verify. Verification of employment. Maybe they need an updated bank statement to show the funds are ready to go for closing. Also, it provides the information for the earnest money deposit as passed through their account. That's a conditional approval area. And once those documents have been satisfied, then they will issue us a final approval or clear to close for traditionally what you guys call a lender commitment. So it's a little bit different verbiage on our side, but we're all sharing the same theme. So I just kind of wanted to clarify it. So
I would suggest when we're writing these contracts that we do not let the default date to 30 days on lender commitment, that you really take a good look at that and be mindful when you're monitoring your contract and your timelines, and maybe extend that out a bit. It would not be a bad idea to extend it out a week or so before closing, and be mindful of it. If you don't have a true hard lender commitment, you may need to ask for an extension.
And I'll give you another example just so it kind of clarifies it a little bit. I have one that I'm working on now. The contract needs to have the lender commitment by, I believe, today. But the borrower's updated bank statement doesn't come out, I believe, until next Monday or Tuesday. And this needs to show that they have the funds to close and also that the earnest money deposit has passed through their account. So you kind of see how the dates can fall with the contract versus what the buyer has to offer at the speed they're able to provide documents. That's where we get into a little bit of the area where sometimes the lender commitment is waiting on something from the buyer. So, does that answer your question in that?
Yeah, I think so. Just so, in other words, if we have someone come to the table with that pre-qual already set in place, would it be reasonable to assume, let's say, if we start with a pre-qual already, that in 3 weeks, under normal circumstances, that we could get to that point where you could give the technical clear to close? Or would you suggest still that maybe you do 30 days? And with this highly competitive market, you know,
Yeah.
it's tough. So
Yeah. So at the beginning, we're given the pre-qual letter in order for them to go shopping to get under contract.
Right.
And what we've done at this point is we've pulled their credit. We have went through and asked them to, you know, give us some information on what assets they have. We put that into the file. We've labeled it by their bank account and approximately what they have in there. We've ran it through Freddie or Fannie to make sure that we're getting an approved eligible, so they actually know that they're going to qualify for the mortgage. What Fannie and Freddie screening does is it goes through and reviews the credit and all the criteria in the application to make sure we don't have any issues with the borrower. At that point, we give you the pre-qual letter, and then they go shopping with you. They find a house, you enter into contract. At that point, once they're in contract with you, the borrower starts giving us all those supporting documents because they need to be updated
Right.
documents. We need the most recent bank statements, pay stubs, et cetera. So all that immediately gets submitted in, and we usually have it back from underwriting in about 1 to 4 days with a conditional approval. So at that point, then it's going to need an updated bank statement, pay stub, et cetera. And then once the borrower has given us that, then we will receive the final approval or clear to close or lender commitment for you. So sometimes the date that the borrower can give us something falls past what you guys have put on the lender commitment, and it's out of our hands. The only thing we can do is let you know that that's going to happen. I guess I'm trying to answer the question
Okay.
as clearly and
No.
honest as possible. So,
okay, thanks.
yep.
Does anyone else have any questions? Because I have a few questions about understanding the process for our panel. Okay, so can one of you gentlemen please let us know how COVID is affecting our CTC and the whole process in the application from
So
beginning to end?
So when it first hit last year, we had a major pullback of a lot of individuals not being in the office, and there was a little bit of a scramble with everybody working to work remotely. And also we had in Florida, we had a tremendous amount of people that were moving down and buying homes in Florida. And then in conjunction with that, the rates were low. So you had a lot of individuals that were jumping on and refinancing. So we had a huge influx last year all in one time. And what this did was it overloaded the system with the appraisers. So the appraisers were getting multiple and many offers on a daily basis versus what they traditionally got. Their volume went up exponentially like yours did with the contracts. So when this happened, the system wasn't ready for all that to come through, and lending got bogged down a little bit last year. The appraisal process got double and triple the time that it was in past times. We've been seeing that the appraisal process is starting to get caught up now. It's getting into a better time frame of how long it takes to get one done. That seems to be getting much better. Also, I've been seeing a little bit more often some appraisal waivers. So that's been helping out. And I've seen that some of the lenders have started adding more underwriters that are working remotely to kind of speed up the process. So last year we had a bog down for a few months, and it seems like most of it is getting better caught up than it was before. The other part of that is they are definitely going to verify employment right before we close with every single borrower. It's on every single one of them, and it's a must-have. And if they can't get sometimes I've had individual that worked for the post office, and that is a little bit of a lengthy process to get a verification of employment for somebody who works for the post office, as you can imagine. And if we can't get the information we need to verify the employment, then it could prolong, a day or two of the closing, but they try to get that going ahead of time. And under this individual, we were able to close on time that worked for the post office, but it's just one of those situations where they are definitely going to verify employment on every single individual, and that's a covert overlay. We've seen some pullback in some of the construction products and a little bit in the credit scores, but the main thing was the appraisals were taking much longer in underwriting, and everyone was getting bogged down. But that seems to be getting much better now, where we're seeing things come back out of underwriting in 1 to 4 days again. So that's much better than it was, and the appraisal process is improving. So.
And it's also my understanding, and I'm sorry if I missed that they are asking the borrower to also pull bank statements just before they go to closing. Is that correct? So should the agents be, kind of preparing their borrowers on what to expect during this process?
So the verification of assets has always been something on the mortgage, but they are definitely wanting to see that the assets are ready to go for the closing, and they're wanting to see that the earnest money deposit has passed through their account. And sometimes this is where we fall with the bank statement. Everybody has a bank statement coming out to them on a monthly basis. We all have different cutoff dates of when the statement starts and ends. And so if the commitment or the closing date falls before their next bank statement comes out, that can be an issue trying to get that documented. But they are definitely going to want to see assets and the earnest money deposit before they close.
Okay. And would you be, could you elaborate a little bit on the process with the homeowner's insurance?
Okay, so with the homeowner's insurance, a couple areas where we ran into some issues in the past. What we traditionally do, Mark and I, and also Jade coming on board, is we ask the individuals just to get an insurance quote at the beginning, meaning just give us the agent's information that you plan on using for your insurance. We just simply need them to give us an estimate on what your annual insurance is going to be, so we have that number, so it can be part of the numbers that they figure for the debt to income ratio. We don't need them to bind the policy at that time. What happens in the past is they have went ahead and bind the policy, and the information gets sent out to maybe the borrower's either their email, or a letter goes out to them in the mail, and the policy doesn't get paid for. And then they send out a letter and cancel the policy. And then when we try to bind it, it's already been started and canceled. So we always recommend that they just give us simply the agent's information and the amount of the policy is going to be. And then when we get closer to closing, we let the agent know that we're ready to bind it at that time. And it's going to be paid for at closing, not outside of closing, unless the borrower decides to not escrow taxes insurance, then that's a different situation.
Thank you. I appreciate that. Does anyone have any questions? I'd like to introduce Britton. Most of you know her. She's a dear friend of mine and also my partner with Select Title. Britton, would you help us understand the process and what you see on your end with on the closings, working with the lender, and anything that you'd like to clarify for the agents today?
Hi, good morning, everyone. We are seeing a lot of different things. First, I'd have to say a lot of contracts are coming in to close quickly, and we can close things fairly quickly. We can get title searches back within 24 hours if we need to. Our only hangup would be city lien searches, which if it's in Palm Coast, we get them back in a day. So that's no problem. The estoppels though. So if they're in a community, we want to make sure that we're giving enough time to get estoppels. Minimum, they say, is 3 days with a rush order or 10 days without. Many people don't want to pay the extra rush fee because it's $106. But on get it in, our underwriters are taking, I would say, 5 to 8, because with everything. We then, once we get the title search back, we move it into the closing department, get our titles out to you guys and to our lenders, get out prelim CDs to our lenders, all the necessary things that we're doing. We were doing a homestead check stop, or if you've seen closing statement.
Oh, I think we lost, oh, there's Brett. We're having a hard time hearing you, Brett. I don't know if you can hear us.
We no longer do those. On it, you can
Okay.
hear you.
Yeah, we're having a hard time hearing you. I'm
We're
sorry.
having internet issues.
Yes. Technology.
Uh, um, so does anybody have any questions on what our process is or what we can do for you? Can't hear me.
Nope, they can hear you. Everyone's
Oh.
quiet this morning.
Part of your presentation broke up for a little bit, so that might be part of it.
Yeah. We are seeing major delays in our mail carriers. So UPS, the Postal Service, FedEx, our packages are not coming back in time. They're not getting to customers in time. That is a huge problem that we're seeing here.
Okay. Thank you, everyone. I really would like to open this up for some engagement. This is your opportunity to ask some questions. I do have a question about, I think, oh, Mark's already answered that. Thank you, Mark, but I'll open it up for everyone. What is the maximum amount a buyer can receive from a seller in a VA loan?
4%.
4%. Thank you, guys. Anyone else? Our closings, so closings are not remote, but with paper. Can someone answer, Brett, can you answer that, please?
Closings, well, they're a little funny right now. If we do a seller package, we can do it by email. We can email it to the customer. They can print it off and get it notarized, and then we provide them with a UPS label to come back. They can do a remote closing. However, they have to have 2 other witnesses in the room with them in order to sign the deed. So a lot of times people don't have the extra people that are not related to them in the household to be able to do an online notary. That's what we're finding out. But buyers, a lot of the buyers, especially when they're paying cash, they can e-sign documents now. So it makes it a lot quicker, a lot easier, less contact for people, because obviously that's a concern with COVID.
Excellent, thank you. Anyone else?
Britt, does that, when you say e-sign without notarization, if they're cash buyers, just e-sign and send them back? Is that what you're saying?
Yes, ma'am.
Okay.
Might have
And
one.
then Brett, I have a question.
Yeah, when we hire, we don't have any document, so I can't hear you.
Go ahead, Phil.
I think she froze up again. I was actually going to ask Brett a question. Are you able to hear us, Brett?
I can hear you now.
Okay. So on the virtual close package with the mortgage lenders, from what I understand, a portion of it is e-sign, but there are still a few documents they have to wet sign with you. It just kind of helps speed up the process where they have e-signed a good portion of it before they arrive at the title company, and then it reduces how much they have to actually wet sign and notarize. Is that how that falls?
Yes, that is actually a wonderful product. If we can get our customers to do that, it saves about half the package. So it's really wonderful.
And we have that option on our side. Mark, are able to do that on our side. The client's willing to go down that path. They can e-sign a good portion of their closing documents and then show up with Britt at the title and just sign a few documents with the notary portion of it, and then they're in and out quicker.
Yeah.
Brett, can you just clarification for us here. E-sign is not notarized. It doesn't need to be with cash buyers, or no witnesses are needed with cash.
That is correct. So with a cash buyer, there's only the HUD settlement statement and 3 other documents that we required at closing, and nothing has to be notarized. So we use Adobe eSign, and we do need, like, if there's 2 people on the contract, 2 buyers, we would need a email address for each person. And we just set it up, and the first person signs their documents, and then the email goes to the second person, and they e-sign their documents, and it comes right back to us. It's pretty cool.
Very cool. Very cool. Anything else?
Me again. Well, just wondering, you talked about a lot of products in the beginning. We started wondering 2 things. If you could give us, and maybe you said you were going to do this, but if you could give us maybe some printouts, some sheets for us, references for that, so that we could, you know, have more detail on that. And secondly, does Motto have maybe sheets that we could use, like consumer sheets sort of things? What to know, you know, what to do during your, you know, this is how your mortgage is going to go, that kind of thing. Maybe you have something in place already, but that we could give to a buyer.
So on the overlay of the products or overview, actually Pam suggests I get with Mary, and we started putting together a cheat sheet, and that's getting finalized. I have to actually review it today, and that's going to come out to all of you. Kind of
Awesome.
overview some of the products that we went over with today. And we can actually create, if you like, something with going over the process, the overview of the application, the pre-qual, the conditional approval, the final approval, the closing. We can put together something like that, and also a package and give an overview of the from application to closing. I think is that what you're asking for, Nanette?
Yeah, I think that would be great. Thanks.
Okay. Yeah, we can put together something like that for you as well. But the cheat sheet for the products are coming out.
Okay,
We've already begun working on that one.
thank you.
Britt, do you have a question?
Welcome.
I don't really have a question. I just kind of wanted to go over, I guess, how wonderful it is to be able to work with your partners. I know you guys, you know, try and use your partners as much as possible, but from what we see in the title office is when we're working with these big banks, they are very delayed compared to our mortgage partners. I think the big banks got inundated with also the PPP loans, and I think that they are all very behind the process. So we're seeing longer close times than normal when you're working with big banks.
Thank you, Britt. That's good information. Thank you.
Yeah.
And I'd like to add to that point. Each time that I've had to call Britt or Christina over at Select Title and ask them to move a date up, they've been able to accommodate us in the past. It's been wonderful, and it's been a great experience working with Select Title. So.
Thank you. Thank you. We have just added to our Buddy Better as well. So we have someone that started this week. Hopefully by the end of the month, she'll be up and running in our closing department. Christina will still come and do all the closings, but we're going to have more processors in the office taking care of things.
Great.
Excellent. Excellent. Well, I'd like to just make sure that we have no other lingering questions before we wrap up our session today. I'd like to thank everyone for your time. We really appreciate you coming out and joining us. Oh, go ahead, Gabby. Delayed reaction. We can't hear you. Can't hear you. Nope, can't hear you. Nope.
Your mic is off mute, but there's no sound coming out.
Nope. Do you want to text it over in the chat box? She's texting, typing away. What is the perfect time for commitment and closing? Are you for a loan commitment?
Are we maybe looking at the time frame?
Yes. What should they be putting in their contracts? What's perfect?
So I traditionally, I think you write up a 30-day contract. Is that what I assume with the realtors? Traditionally, it's a 30-day contract. And then on the commitment, you're putting what is that traditionally within what, 15 to 18 days from the time we go to contract?
Gabby, we can't hear her. So the contract defaults to 30 days
Mhm.
for
Yeah.
loan commitment
So 30-day commitment
and a
and
45
45-day.
day close. Yep.
Yeah. So that time frame should work out. Where we run into some areas of gray, I guess, for that is if you have, like, I have one, I can just share with you scenarios that I'm currently working on. I have one borrower that's waiting to pull funds out of, say, a mutual fund. And so depending on the speed of his documents and verifying the assets to complete that milestone on the conditional approval is what gets me to be able to commit get the lender commitment is what you're asking for. So traditionally that 30-day commitment and 45 days to close should work, but occasionally run into areas where we're waiting on the speed of the documents from the buyer to verify some assets. But traditionally that should work, that 30-day commitment and 45 days to close. Hope that answers the question. Trying to answer it as best I can. We run into, it's not a one size fit all scenario sometimes. You have people, have another individual that's moving money around from 4 different bank accounts and putting it into one. And so we have to source all that and show where all that came from and to. That's part of the Patriot Act. And so, if they've moved around a lot in a few days, we're waiting for it to validate, that could definitely go past the commitment date. But that's again a special scenario. Traditionally, that 30-day commitment and 45-day close timeframe should work.
You're welcome. I think it's important to just be mindful of your contract and communicate with your partners in place and your lender, because sometimes your lender is going to need some help nudging your buyer as well. Sorry, there's a back echo there. Sometimes we need to work with our buyers and just nudge them in sending the documentation that's needed. Many times we want to just kind of come back and give backlash to the lenders because they're not moving in a timely manner that we want. But in essence, their hands are tied. It's really on the delivery of the borrower and how compliant they are in delivering all of the needed information to the lender. So sometimes we need to, I think we need to educate the borrower and let them know what the expectation is, and that we're working together as a team to facilitate everything in a timely manner.
Looks like there's a question for Britt.
Yep. Brett, would you like to elaborate on the 3D service for the agents?
Sure, I would love to. We do the 3D Matterports for our select agents, and we are in process of training someone new. I'm hoping that we can get her trained by I think next Friday is our scheduled date. But what we do is we provide the Matterport. We provide a preliminary title search and a preliminary settlement statement or CD at the time that you list the property. We have waived the fee for that currently. So there is no charge to the customer. All that we ask is that they use our title services. So that is wonderful. And as soon as we can get Miss Lauren trained, I will let y'all know so that you're aware that you can start ordering those again. It's a good program.
Thank you, Brett. Anything else? Last call?
And you're welcome, Joanne. I just seen your text.
Well, in closing, I just want to thank everyone for attending today and participating. We really appreciate each and every one of you. Follow us along on social media. You can find us on Instagram and Facebook. We will be uploading this to our Motto Mortgage Selections website, so you can replay this if you have any questions or want to go back and visit. Great content. We will get out some flyers and handouts for you as well. I think that was really good. Thank you, everyone. I hope you have a fantastic day, and we appreciate you.
Thanks, everyone.
Thank you.
Thank you, everyone.